This conference will now be recorded.
Good afternoon. My name is Bill Garber, Director of Government and External Relations for the Appraisal Institute, and welcome to AI Answers, weekly updates from the world's leading valuation authority. Today is May 27th, 2020, and with us is Lyle Radke, Director of Collateral Policy for Fannie Mae. Lyle has been integrally involved in various collateral and appraisal policy development and responses in relation to COVID-19. And we thank you for spending time with us today to give us an update from Fannie Mae's perspective related to COVID and other underlying appraisal matters. So Lyle, welcome to AI Answers.
Thank you, Bill. Thank you for inviting me, and looking forward to our conversation today.
So let's start talking a little bit about one of the initiatives that Fannie Mae and the Appraisal Institute have been working on over the last year. The first one relating to appraiser diversity. Fannie Mae and the Appraisal Institute have been coupled together with the National Urban League in developing a program around appraiser diversity development, or ADPI, Appraiser Diversity Pipeline Initiative. Lyle, can you walk us through a little bit about that initiative from your perspective?
Well, first, Bill, I want to thank the Appraisal Institute for partnering with us on the ADPI and also the National Urban League. We feel like this is an important program. The way it works is it offers a 3-hour hosted program that provides participants, attendees, with a step-by-step explanation of how appraisers develop value opinions, and then it walks the individual through the state-specific requirements on how to become an appraiser, and then gives them an opportunity to ask questions. We bring in a panel of local appraisers to answer their questions. So it's intended to be a very intimate, paced interaction, which gives people who maybe don't know a lot about the appraisal industry or the appraiser profession a foundation. And the goal is to invite them, if they're interested, if this resonates with them, to become a trainee and to create opportunities for appraisers and potential trainees to connect. The last ADPI event was May 19th, and we checked in with our scholarship winners in a digital setting. We've got awarded, I think, 4 scholarships so far, and one of them is a practicing trainee, and the other 3 are taking their classes and getting ready. So it's not a huge volume, but we do feel like it's important in the sense that it's creating interest in the profession among groups, demographics who otherwise might not have exposure to it, and that it's important that we encourage new entrants into the profession.
Yeah, we agree. We were a late partner to this, having joined in the middle of last year, but we have been involved in the sessions that were held in Chicago and New Orleans, and I actually got to see the one in New Orleans myself, participate in that one, and see and witness the interest, which was really great to hear and see moving forward, that there's real interest in the appraisal profession from a wide variety of ranks. There's a wealth of opportunities within the appraisal field, whether it's on the residential side or the commercial side. We saw interest from both perspectives, and also just trying to overcome some of the hurdles of entry into the profession, whether it's from education or trying to provide mentor-mentee relationships. Some of the long-standing issues that we've all been confronting and trying to grapple with have become real apparent to us, but also there to try to tackle. The Institute is putting scholarship money towards this, and I think we've given as many as 8 scholarships so far for education programs, and then we have an education trust as well that has committed another $20,000 towards that cause in 2020. We just did a meetup of sorts with some of the past or prior participants, and we did a check-in last week, in fact, and had a visit with some of the prior attendees and those that are pursuing it, and had kind of a information exchange, which was really well received. And it's unfortunate on a lot of fronts with COVID, we've had to pare back the face-to-face meeting components of this, but we are contemplating trying to do a virtual arrangement. I hope we can get that done this year and provide a technology platform, because there's, I think, still a lot of interest out there in the marketplace in joining appraisal, especially right now, given all the effects in the marketplace right now.
Yeah, you raise an interesting point about trying to help encourage these people to become appraisers and to work through the process. It really sheds light on the challenge of becoming an appraiser and how challenging and how difficult it is. In my job, I mean, like yours, I talk with a lot of different appraisers, and I love to hear their stories. And the common story, the most common story, I think, is, and this is true for me as well, I got into the business through a relative, a family member. That's very common. And when you're working with someone that you know well, a friend or a family member, the process is sort of made easier because they really take you under their arm and mentor you. They help you through. When you're coming in like our winners from the outside with no prior connection and no one on the inside to help you, it can be really daunting. And I think the future of our profession really needs us to expand out from kind of this family-centric model of becoming an appraiser if we're going to be successful in the long run. Really, I'm very excited about the. Oh, sorry, go ahead, Bill.
No, we agree, and we've been looking at other pathways and trying to work through some of those issues with the other stakeholders, including the Appraiser Qualifications Board and the state agencies and the like, because there certainly are some different ways that we could be exploring. Even if it's just some of these components, whether it's the experience component, maybe drilling down and looking at some alternatives around the experience requirements. I know that there's been some ideas tossed around out there. One of the things that we've talked about as an organization that hasn't gotten a groundswell of support yet, but it's something that we have discussed internally is whether we ought to move to a test or exam-based type of license and certification process, and elimination of experience requirements at some level to try to simplify that process coming in. There's not, in many things like within the appraisal field, you're not going to get everybody to agree on things, but and that one's certainly, I think, within that mix. But that is, if you look at some of the underlying issues with entry to the profession, the experience requirement is certainly one of the biggest hurdles that people face.
Well, a couple other thoughts come to my mind as you're talking. One is that the nature of our society and our economy have really evolved since the appraisal licensing structure was first conceived, right? This licensing really comes out of the FIREA response to the savings and loan crisis in the late 1980s, and that was really pre-internet age. So we're 30 plus years later. One of the things that has changed since that time is consumers of appraisals, particularly lenders, have a much greater ability to validate appraisal results. So back in 1989, appraising was really a matter of trusted professional. The lender had nowhere else to go for information. And so you needed a strong level of trust in order to ensure that you were getting a reliable appraisal. Today, that's definitely still true. We look to our appraisers as a professional and someone that we need to have a high degree of integrity and trust. But we're also in a data-rich environment. We have more data today than we've ever had before. And so a lot of the things that the appraiser is telling us, we already know, or we can find out through other mechanisms. Now, there's still something really important that the appraiser brings to the table that is unique, and that's the ability to analyze the market, right? So I'm not saying that that appraisers are in any way dispensable, but what I am saying is we have more of an ability now to validate than we ever did before. And that means the credentialing process becomes a little less significant. We have ways to QC. If the appraiser doesn't know their stuff, we can find that out. If the appraiser does know their stuff and all they have is a training license, that's okay. You know, they know their stuff. They're doing a good job. We can find that out. So I think that should influence how we think about trainee. It's not so much a matter of trust as it is a matter of creating the right opportunities, and we can validate whether or not they're executing those opportunities successfully.
Sure, I can understand that. Of course, the appraisal space has a broad range of clientele, so they're serving a variety of client user types, whether it's the secondary market or for estate and litigation support or for ad valorem purposes and the like. So it is a difficult balance because you might have a need for that holistic approach, especially in defense of your work. If you're really in complex assignments, or if you're in a situation where you're going to need to defend your work at all times before your peers in a courtroom or in some other exercise, that kind of the full enchilada, if you will, is really valuable there. So I just don't know how you balance that in that particular case.
Agree completely, right? There are certainly those kinds of assignments that are specialized where mentoring seems to be the best path, the best way to get that knowledge quickly.
And I think one of the things that you all have been looking at too in relation to the COVID-19 response is technology, use of technology, the ability to adapt. Give us a little bit of an update on where you are with your COVID-19 response and the appraisal flexibilities that you have enacted or accepted in the marketplace.
Yeah, so I guess the latest is that when was it? A couple of weeks ago, we extended the sunset out to June 30th. Now, I should be, specific about that. The sunset is based on loan application date. So if the loan is applied for by June 30th, then the appraisal can utilize the COVID flexibilities. So in theory, you could be receiving orders for flexible appraisal assignments for maybe as much as a year after that June 30th date. These loan application deadlines or dates don't expire for a long time in Desktop Underwriter. But we do expect that the number of flexible orders is probably going to go down dramatically after June 30th, and remains to be seen, right? If we would, there's still a possibility that we could see another extension. We're monitoring, conditions on the ground, so to speak, and working with our regulator, FHFA, and Freddie Mac on that process. But assuming that sunset holds, then after June 30th, new applications would need to go through the traditional appraisal route, and we expect to see a decline in the number of flexible results. So I'm glad you raised that topic, though. I want to just touch base a little bit on the response, the appraiser's response to the flexibilities that we rolled out. Kudos to the appraiser profession for how they've responded. I've talked to so many appraisers and also lenders, their customers, about the reports that they're getting and about the appraiser's response. It's just been overwhelmingly positive. People are collaborative, trying to help solve the crisis, the problem that the country is in. People are concerned about the health of the borrower and the contact and the appraiser, right? And I think all that concern and all that engagement just really reflects very well on appraisers as a whole. One of the things that we've done is we were concerned, right? We don't have a huge amount of experience with, let's say, desktop or drive-by appraisals. And so we were concerned about the risks. What does it mean in terms of credit risk? What does it mean in terms of the quality of the loan manufacturer? So we have a team in our Plano, Texas office whose role is to review valuations for our REO properties in our short sales. Very important niche, right? When we have an REO property, one of the most important things is to get the list price right, to get the asking price right, and that's really tied to value. What's the property worth? If you list it too high, it's going to sit on the market a long time, and people start to look at it and say, "Gee, what's wrong with that property? Why won't it sell?" And that makes it harder. It starts to get stigmatized. If you list it too low, then you sell it too low and you leave money on the table. And in our role as loan guarantor, leaving money on the table is a really bad thing, right? That's bad for business. So we want to walk that fine line. We want to nail it on the list price. So we have a team of really the best of the best in terms of valuation expertise who looks at each REO property and reconciles or considers all the valuation information, including appraisals that we order in determining the target. Well, those folks, they're not very busy right now. Our REO volume is at its lowest point in many, many years, since well before the crisis. And so we were able to take that team and say, hey, can you give us some people to look at these new COVID flexible appraisals as they come in and tell us, how we're doing here. What's our risk exposure? And so they've been helping out with that for the last several weeks. Got some interesting results from that. Would you be interested in me sharing a little bit of that?
Absolutely. Yeah. No, that sounds fascinating.
All right. So just a little bit of background. They looked at last report, almost 2,000 appraisal reports. Of those, we did a sample of traditional just to make sure we baseline this. And so about roughly 300 traditional. And then of the others, it was split more or less evenly between the desktops and the exterior only. So we did look at all three types there using the traditional as a baseline. What we found is that one of the most common issues was in the labeling of the report. So did we flag it? Did the appraiser flag it as either exterior only or desktop in the map reference field? And over 90% of the time they did, or they do. So pretty good success rate considering how quickly we rolled this out and how ad hoc that kind of response is. But still,
I'm surprised to hear that figure given the timing and the sequence of events.
Yeah, so that was encouraging. Another thing we looked at was external obsolescence. So particularly for a desktop and for an exterior, but I think for the desktop was the greatest concern. The appraiser's not out in the field They're not looking at the neighborhood or the environment around the subject property. And so the concern is, would they miss important externalities? And we used a variety of different tools, things like, satellite imagery, and other tools that we have internally to look at this question. What we found is that the traditional, our baseline sample, missed or failed to report external obsolescence about 11% of the time, while the desktop missed or failed to report it only about 9% of the time. So shockingly, the desktop was actually doing a little bit better on this metrics than the traditional approach. That could be a little bit random. The traditional sample is not huge, and I don't think 2 percentage points is anything that we're going to be super concerned about. But it's very reassuring, right? And I think it reflects that the desktop appraiser, knowing they're not out in the field, is maybe trying a little harder, just being a little more conscious of that, and looking at the mapping and the photos and the resources that they have available to answer that question. The group that did the best on this topic, though, was the exterior only, where they missed external obsolescence only about 6% of the time. So driving by seemed to make a difference, seemed to improve the situation. So what do you think? What's your reaction to that?
Well, no, I mean, it sounds like there's an experienced lot of people in the field that they may have maybe some insights to the marketplace and have gone through some storms before and can weather it and adjust at the same time. I mean, we all went through a changing market about a decade ago, and much of the profession was largely in place then at that time. So it sounds like we're benefiting to some extent by some experience that's been in place and built in.
Undoubtedly true, right? It's the same appraisers doing both types of assignments. So yes, the background and the experience informs that desktop or that exterior and helps supplement any gaps in the scope of work. Another thing we looked at, so if you think about it, missing an external obsolescence is bad for the lender, bad for Fannie Mae, because that would tend to inflate the value or understate our risk position. But from a buyer's perspective or a borrower, they'd certainly want all the positives of their property accounted for in the analysis. In fairness, it should be. So we also looked at that. Were positive features, significant positive features, missed in the case of the desktop or the exterior? And we found a really amazingly high rate of compliance. 98, 99% of the time, we felt like they were able to identify all the positive features. That failure rate is only about 1 or 2%, and it was about the same for X-tops and for exteriors. So I think that's reassuring, or can be reassuring for the public at large, that these flexible scope of work, if done right, don't devalue the property. And they do take into account all the positives.
Yeah, no, that's great. That's reassuring to hear. Now, one of the things that I hear about from members is the continuation of the interior exterior requests, even in areas that may have some underlying health concerns. What can you say to the uptake of the flexibilities and what you're seeing in the data as far as use, across the country?
Well, that was one of the big surprises for us. We really wanted to encourage lenders and appraisers to adopt the flexibilities. We certainly don't want to put anyone in harm's way. And we've made it very clear that we're not going to second guess the decision. If the lender and the appraiser together decide that a flexibility is needed, that's great. Go for it, right? We're never going to come in and say, oh, it's Wyoming, you shouldn't have done that. It's like, you are on the ground, you're in the local community, you decide based on local circumstances, whether or not you need to take advantage of the flexibilities. So that said, we do see that the majority of UCDP submissions right now are traditional appraisals, traditional scope of work, and that the uptake on both the desktop and the exterior has been, I guess, much less than what we expected. And we do see this vary by region, by geography. So the Northeast, New York, New Jersey, Pennsylvania, Vermont, those are some of the areas where we've seen the highest uptake rate. I don't think that surprises anybody. That's certainly where that's a hot spot for the pandemic, and so certainly more flexibility would be needed there, and we think that's appropriate. We also saw a little higher uptake rate in California and a few other hotspots here and there. But for the most part, what we see across the country is that the uptake rate was probably less than a quarter, and that most appraisals are coming in the traditional scope of work. So we're not sure why that is. I mean, we've talked to some lenders about this. We certainly are deferential to the lender and the appraiser on making that decision. But I don't know, why it turned out to be the rate that it did. That's something I think we're going to continue to study over the long haul and try to understand better.
Yeah, that would be helpful. My guess is that it might relate to some of the other kind of historical issues that loan sellers might have with overlays and repurchase risk, kind of the conservative approach and trying to check all the boxes and cover your bases as much as you can. At least that's what I heard from some of our members who were talking with clientele, that they were wanting to cover as many bases as they could, and they didn't know where this might go, where the loan might go or be sold to, or how it would be guaranteed, and kind of that drive to the least common denominator that I think everybody's been grappling with for a long time. It was discussed, prior to COVID as some of the lender overlay concerns, which I think just ultimately come down to a lender education issue at some level.
I agree with that, and certainly that's a challenge for something that happens so quickly, right? To get that message out, to get the education and encourage and create the incentives to adopt. I think one thing I've heard from a number of different AMCs and to some degree their clients is that the apparatus for ordering and tracking appraisals is so automated now that it's maybe not that nimble. It's hard to change on the fly, hard to change the type of assignment, hard to customize assignment conditions. So I think that's another challenge, is maybe some players looked at this and said, oh, it's expiring in May or it's expiring in June and it's hardly worth the trouble. I think one lesson we're taking away from this is that you never know what the future might hold, and we need to think about ways to build more flexibility into our process and into our policy requirements, so that next time, hopefully there's never a next time like this, but whatever the future holds, we need to be prepared, right? And I don't think we were entirely prepared this time. We were too rigid coming into this.
Well, I can certainly appreciate that point about the workflow and trying to adjust, because there is a lot that's built into some of those order platforms and those systems. So to make adjustments to it, I could see being very difficult, especially if you were envisioning it as a short time measure and what you might deal with. Do you have any sense as to the ability of loan sellers to be flexible, if it was easier for larger or smaller institutions to adapt within the data, or is that an unknown?
That's a little bit unknown at this point. One thing I have heard is from some of the larger players that they have other motivations. They felt like there was liability involved that they needed to consider, that maybe a smaller player might not have the same liability exposure or have the same sense of liability. So I think that maybe motivated some of the larger players to try harder to adopt, but I'm speculating. I don't really know.
Sure. Well, before we move on to other issues, sticking to the COVID analysis, technology, we touched on it a little bit, but we didn't really get into it. What do you see? And I know that you've been a big proponent in trying to pivot into a more tech-based type of a platform uh, for appraisal. What have you seen so far as any derivative technology use by appraisers during the COVID event? What do you think has longevity and legs moving forward post-COVID? Use of technology by appraisers.
Actually, that's, if you want to call it, that's a bright spot in all of this, is that the creative energy in the technology space has been tremendous. And we've seen a lot of new applications rolled out, new services for appraisers in terms of gathering data. Uh, for example, when we require at a minimum a desktop for a purchase, the one of the things that we've tried to make clear is that we don't want the appraiser to do any guessing about the basic amenities, the quality and condition of the home. So we want them to go get a data source. And with a purchase, you commonly have that MLS, and you may have additional online presence for that property. So there is a lot of information out there, but it's not always complete. And one of the things that we didn't require, but we encourage, is that the appraiser could call up the agent or call up the homeowner and do an interview, ask them about the home. Well, I think the service industry has latched onto that idea, and there's all kinds of new apps out there that would allow the appraiser to do, say, a virtual walkthrough or a virtual inspection of the home, and really see the house real time. And there's a lot of them have some security controls around geocoding and time stamping those images or that data flow in a way that ensures it's the correct property. They have ways of helping ensure that you've got the correct point of contact, and so that's been pretty exciting. We think that there's some potential for the future in looking at these kinds of technologies and this kind of a process to see what works. I think we would probably start very small and do some testing, but it's an interesting idea that can you have a homeowner assisted inspection and lead to essentially the equivalent of a traditional appraisal.
Yeah, and we did a session on AI answers with Adam Johnston with Genworth that talked through some of the pros and cons with that. If you're interested in exploring that, that was, I think, 3 weeks ago on the Appraisal Institute YouTube page. That if you want more information, you can learn about it there. Let's go ahead and move on a little bit away from the COVID response and to some future initiatives. The GSEs and their regulator, FHFA, have been looking to develop and update and modernize the UAD platform and the forms that appraisers use. What can you tell us where that project is to date? What are we looking at going forward relative to the UAD and forms redesign?
Well, that project is the governance for that project is very specific. So there's only so much I can tell you, but I think a few general concepts are good to share. One is that we're really looking to adopt a concept that's, I don't know, if you think about how you do your taxes today versus how you might have done them 10 or 20 years ago. I use TurboTax, and what I do is I log in. They have an application where they ask me for certain basics, and then that's followed by prompts. If I say I've got children, then they ask me questions about the children. And if I say I've got a job, they ask me questions about the job. And if I say I'm unemployed, they ask me about my unemployment compensation, right? So the app is really intelligent, or in other words, the creators of the app have put a lot of thought into all the different contingencies, uh, and created a user-friendly experience for gathering all the information you need to do my tax return. Well, we think that that's a great idea for real estate appraisal, and there are things that we as GSEs want to know that right now we're not getting in a clear and consistent way. Just to give you an example, and a lot of this is, I'll admit, it's our own fault. We didn't ask for it the first time around, and so some of it is playing catch up, or trying to fix things that we've learned in hindsight is always 2020, as they say. But if you think about it, let's say you're in Phoenix and a swimming pool is considered essential, and it's not optional, right? Most people have swimming pools, and in the summer, man, it's nothing better than a dip in the pool when it's 110 degrees, right? Well, so that's an important amenity in terms of value. In the existing UAD, swimming pool is not a standardized data element. We don't ask for anything about swimming pools in a standardized way. So then when we try and do our QC checking, where it's kind of a blind spot. We don't know if appraisers have got it right or wrong or what, because we can't compare data across different properties and reports. So there's a bunch of things like that that we're going to try and address, where we're going to be more specific about collecting data that could be important to the value. Now, one of the challenges with that approach is you don't want to blow up the process and make it so big and so onerous that it takes forever to do it, right? And a lot of these things that we're talking about are not common in all markets. So, for example, I grew up in northern Illinois. Very few people had in-ground pools because colder climate, it just wasn't as important to us. There are lots of other amenities that are sort of regional. Another one that comes up often is a barn. Well, barns are pretty significant in some rural markets, but they're really uncommon in an urban or suburban market. So we want to know about barns. We want to ask questions about them. But 80%, 85% of appraisals are in urban and suburban markets where there's probably zero chance right from the outset that there's a barn. And so are you going to take up a lot of space on asking about things that aren't relevant to that particular assignment? So we've tried to create a mechanism for capturing the data when it exists, when it matters, and for kind of not capturing it when it doesn't. And the result of that is you're going to see an appraisal form that's more flexible than the current form. If you think about the current URAR, it's basically 2 pages, right? First page is subject description, second page is market analysis. Yeah, you've got your certification page and instructions, but the meat of that is captured in 2 pages. Now, why is that? We ask ourselves a lot of why questions with the current form. And part of the reason why is because the form was designed in pre-digital days, pre-computer days. It's designed to fit in a typewriter. Well, last I checked, very few people use typewriters anymore. And so forcing the form to conform to an outdated technology, maybe it doesn't make sense. We want to re-examine that. So that's part of what we're doing, is we're saying we're going to make the form more flexible. We'll capture different kinds of data. A lot of that data the appraiser is already generating, so we're not really adding to the scope of work. Like the appraisers do tell us about barns and pools. They just usually do it in some sort of an ad hoc way that is not captured in the data set. So it's not as though they're going to have to do more, but they're just going to report it differently. One of the things that everyone's potentially going to need to get used to would be in terms of if you were to print out that appraisal report and you're looking at a piece of paper. I think back in the paper-based days, it was very useful and convenient for readers of the appraisal report, like the underwriter, to be able to look at the same spot on the paper every time to get the same answer. If I want to know the flood zone, I'm always looking about a third of the way down the page on the right. See, and there's a physical practice that helps you get really efficient at mining that form for data. But again, we're in a different world now. Most of the time, they don't print out the report; they're looking at it on a screen, and it's possible, because the data is in an XML format, to map it, route it to different places. So you could, in theory, you could extract that flood certification information and post it in your loan origination system in a place, right? You wouldn't even necessarily have to look in the appraisal report for it. So there's a lot of potential for change, for more and greater efficiencies, because this is digital data. And we're not fully taking advantage of that because we've sort of locked ourselves into this idea of keeping it on a page, keeping it in a piece of paper sized report that could fit into a typewriter. So we're challenging all those assumptions, but that means, the potential for big change, and that's something we want to vet very carefully with the industry before we execute it.
Yeah, no, I totally understand. And I myself might withhold judgment on the scope of work request in the final data package and what that looks like, and whether it's more or less work on the part of the appraiser. I've talked to some appraisers who have some initial thoughts that there might be an expansion of the data request. I think we probably won't see that until we see the final package.
Yeah, certainly in some niches there will be an expansion. Just to give you an example, right now we ask if there's an ADU, an accessory dwelling unit, but we don't get any real granularity about that. Now, some appraisers will volunteer that. They will measure the ADU and describe it in terms of room count and quality and condition, but they may put that into the comment addendum. We think that's best practice, and we think a lot of appraisers are doing that. We may make something like that mandatory, where we say these are the basic data elements you have to provide for an ADU. So if you're already doing best practice, it's no big deal. You just move it from your comment addendum and into the prescribed portion of the form. But if you're not doing best practice, then yeah, it's going to be a little bit of an expansion. And in some cases, that expansion is really going to be good. It's going to make you a better appraiser. But we only see ADUs on less than 1% of all properties. So again, that's not something that's going to impact 99% of your assignments. It's only going to impact those cases where that particular feature happens to be present.
Sure. Again, I don't want to comment too much on it because it's still under development, but I think
True.
that there's some potential for some increases, and also the other variable being, what are the loan sellers going to request as well? What's their level of comfort in all of this? Because it seems as if there might be some variation potential of the work request on the part of the loan sellers to the appraisers.
So yes, so there's a long road ahead of us still, and the industry vetting is a really important part of this. We want to get intake feedback and really think about what the consequences are. So more to come on that, I'm sure.
Yeah, and we've been very pleased to be part of the discussions so far, and it's been exhausting, I'm sure, for the teams at the GSEs, and trying to get feedback from all of the various stakeholders. Having worked in the appraisal field for almost 20 years, I can tell you there's a lot of stakeholders to appraisal. So there's a lot of opinions on what things should look like and what kind of processes should be in place. So it's a daunting task, but we appreciate the outreach that's been done thus far and trying to sincerely gather some information and direct outreach to the practitioner level, because ultimately they're the ones who are going to be using this and grappling with it on a day-to-day basis.
Truer words were never spoken.
Let's see. So what kind of, I'm sure you guys have updates that you provide to appraisers. You probably get inquiries from appraisers on a regular basis. What are some common questions that you're getting, and how can we try to dispel some of those issues or lay some of those issues out?
Yeah, thanks, Bill. So a couple of things to share. We have a mailbox or a contact page on our website for appraisers, and that is www.fanniemae.com/appraisers. If you look on that page, it'll show all the resources that we have that are to support appraisers. And at the bottom of that page, there's a contact us button. So if you have a question about Fannie Mae appraisal policy, feel free to contact us, and we read every request we get, and we respond to every request that we get. We have, I could tell you, we also have a newsletter that we publish quarterly, and you can subscribe to have that newsletter sent to your mailbox. Again, if you go to that appraisers page, www.fanniemae.com/appraisers, you can sign up to receive the newsletter, and you can also see all the prior editions of the newsletter. They're all archived there. When we have something that we want to get out quickly to appraisers, we will commonly use that newsletter. For example, last year there was a lot of buzz in the marketplace about our testing of different appraisal scope of work, and we felt like some of that was not accurate. Rumors swirl and people get confused ideas about things. So we felt like it was important to provide some baseline information, and we did that through the newsletter. Now we do receive, let me think, what's the count? Probably several dozen inquiries from appraisers monthly. And some of the ones I can remember several that we've received recently that I thought were interesting. So I wouldn't necessarily say these are things that we think are more or less important, but more from a perspective of these are things that appraisers seem to think are important because they asked us. So I could give you a few examples of that. One example is an appraiser asked us if they could use comparables with sale dates after the effective date of the appraisal. And they also caveated that these would be before completion of the report, and that they would disclose this, and that their market was stable, the market wasn't changing. So they had good reasons for wanting to use this data. So the answer we gave them is the comparables that are in positions 1, 2, and 3 in the report have to be closed sales. And that means closed sales as of the effective date of the appraisal. The basic principle is that Fannie Mae does not accept retrospective appraisals or prospective appraisals. Okay? The effective date is the date of the appraisal, and so the data needs to be consistent with that effective date. But that said, if you've got pending sales or sales that closed after the effective date, but your signature date was a little later, you can put those in the report, and those can be good support, right? So we don't want to discourage you from using the best available data, and we don't want to discourage you from making a full analysis. Absolutely use those sales if they really are material to the value proposition. But it's all in how you do it, right? So you can't represent them as having closed before your effective date, or you can't represent the appraisal report as being retroactive or prospective. Those are the no-nos.
Sure, that makes sense. You utilizing that newsletter to address some of these commonly related items then?
Yeah, we like to pick maybe one or two questions and put them in the newsletter. We have a little section for that. I'm trying to remember what the question was we answered last time. I should have been more prepared on that. I don't recall. I do have one that that's coming. I'll give you a preview. This is coming in an upcoming newsletter, or assuming it gets through the editorial process. But the question is, the subject property has a portion of the lot. It's a large lot, and a portion of the lot is in a flood zone AE. So the appraiser checked yes in the box on the report that asks if it's in a flood zone, special flood zone hazard. The lender apparently pushed back and provided a certification stating the improvements are not in the flood zone, and would the appraiser please revise the report to say no, it's not in a special flood hazard. So the appraiser wants to know, what should he do? In essence, the question is, in the site section of the appraisal report, are we asking about the real estate, the lot, or are we asking about the improvements only? And the answer is that we are asking about the lot, the total package. So in this case, the appraiser should, they reported it correctly the first time. They should leave it as zone AE. But it's okay to analyze that, right? To take the next step and put in an explanation to say, okay, I've got this flood certification from the lender. It shows that the improvements are not in the flood zone, and it's only this corner of the lot down here that's in the flood zone. And just make that clear in your analysis.
Sure. Yeah, I can imagine that being helpful in certain situations, the conversations between appraisers and their clients, to have that kind of guidance out there and to provide some clarity to it. But it's probably a full-time job trying to respond to those types of requests.
The truth is, the lender generally gets a flood certification, and they generally don't need the appraiser to tell them if flood insurance is needed or not. They have other sources,
right.
And quite frankly, those other sources are somewhat more reliable than the appraiser in general, because they're relying on elevation data and so forth that the appraiser is not going to see in terms of their. We're not that sensitive to elevation in our personal inspections. So one of the reasons why we still ask for the flood insurance or the flood zone is because it's potentially material to value. We want to make sure that the appraiser is conscious of it so they can accommodate it in their valuation analysis. So we've asked ourselves that question: should we retire this? Should we just force the lender to get the information from the database? And we've come around to the decision that we really still wanted on their appraisal report that it is material to value potentially, and so we're going to keep it there. But that means the appraiser should feel a little bit more at ease if there's an inconsistency between what the certification says versus what where the site is versus where the improvements are in this situation.
Yeah, sure. That's an example where you got their back in a way.
Yeah.
So if we bring this to a close, let me ask, what's on your plate over the next 6 or 7 months as we work through COVID and look forward to the remainder of the year?
Well, one thing that's important to us is housing affordability, affordable housing. We see manufactured housing as one good way to help increase the supply of affordable housing. So that's part of our housing goals that we're working on. So we're looking for different ways to really enhance our manufactured housing eligibility box and so forth. One of the things part of that is not something that appraisers can necessarily control, right? You get a request to do an appraisal on a manufactured house, and you just do it according to policy, but you can't generate loan applications for the lender, obviously. So there's a big piece of this that happens upstream of the appraisal. What I will say is that we're looking very carefully at our selling guide requirements and limits on manufactured housing, and that's something that you may see more announcements on in the future. We are also working hard to provide training and assistance for appraisers who do appraise manufactured housing. We recently rolled out a co-branded continuing education class with McKissick. I hope I can say that in this forum, and that's available. We also have a number of training aids on our website. That same webpage, fanniemae.com/appraisers, has a number of links to manufactured housing information. So all of that is important to us. It's something that we're going to continue to encourage.
Of course, you can say that, and I'll add on that the Appraisal Institute has a manufactured housing education course as well that's available with partner Freddie Mac. So the more education, the better on that particular subject. I appreciate you bringing that forward. And for your time today, Lyle, honestly, you've done a lot in the last several months for the appraisal profession, just the response and the reaction, the accessibility as well. So I do want to personally thank you for being a steward and being thoughtful in the approach that's been taken in a very intense and very tough time. I think the results are very positive as far as the interactions between appraisers and their clients. We're seeing that in some of the data, but much of that really wouldn't have happened without your leadership. So I want to personally thank you for that and on behalf of the organization.
Well, thank you, Bill. I'll say it's rewarding. My roots as an appraiser are near and dear to me, and I always keep that front and center when we have our policy discussions and when we think about, what are we going to do as a business. I want to make sure that the business is sensitive to the perspective of the appraiser. I think that's an important part of my role and our mission. And it's been gratifying to see how the appraisers have responded to the crisis in particular and stepped up to the plate. And so it's been a really rewarding time for us. Thank you for inviting me again, and be happy to come back anytime in the future if you'd like to talk again.
Absolutely, Lyle. Thanks again for your time, and thank you, our listeners, for joining AI Answers weekly updates from the world's leading valuation authority. Everyone stay safe out there.